Greetings, members, one and all of the Salivation Nation. Do you agree with Goldman Sachs and that it's the time to buy gold, the currency of last resort? Let's explore. Well, apparently some of you do, because there's another article here from Market Watch that says that there's a gold buying app that sees a 718% spike in volume as the coronavirus volatility drives investors to havens. These two stories out today, but let's see what they have to say as the gold and silver prices have gone up. And I tell you what, gold has recovered almost all of its losses since its highs. The current coronavirus-induced economic and financial market turmoil is seemingly the perfect environment for gold. We have long argued that gold is the currency of last resort, acting as a hedge against currency debasement when policymakers act to accommodate shocks such as the one being experienced now, said analysts at Goldman Sachs, led by Jeffrey Curry. Yet, while the yellow metal has done far better than the other assets, it has slipped 2% over the last month. The Goldman analyst, from a 12-month price target of $1,800 an ounce, said that it is about to change, thanks to the Federal Reserve's aggressive bond purchase plan unveiled on Monday, in which the U.S. Central Bank said it would buy as many treasuries and mortgage-backed securities as needed to keep financial markets running smoothly. The Goldman analyst said gold has been weighed down by a world in need of dollars, requiring forced sales of liquid assets like gold. The downturn in oil, as Saudi Arabia and Russia failed to agree on production cuts, has also created dollar shortages for emerging market economies, which may have made Russia a net seller of gold, according to Goldman. In 2008, the Goldman analyst noted the November announcement of quantitative easing was a turning point. And here we see Exhibit 2, gold also underperformed in 2008 until the Fed stepped in and removed liquidity constraints. We can see here what happened there. U.S. trade weighted dollar and gold just climbed up and up and up. We are beginning to see familiar pattern emerge as gold prices stabilized over the past week and rallied Monday as the Fed introduced a new liquidity injection facilities with this morning's announcement, they said. The analyst that said that the Fed easing funding stresses focus will likely shift to the large size of the Fed balance sheet expansion, increase in developed market fiscal deficits, and concerns about the sustainability of the European Monetary Union. We believe this will likely lead to debasement concerns similar to the past global financial crisis. In electronic trade on Tuesday, gold futures rose $97 an ounce. And let's take a look at these markets and talk a little bit about what's going on, because all the metals are going up today, and with essentially rhodium doing a 100% increase, a $2,000 jump. So it's getting back up there again. It was down to $5,000 before, but fascinating indeed. Palladium taking second place here with a $215 increase to now it's over $2,000 again. Quite interesting. Man, I tell you what, I'm surprised that the platinum group metals are making the moves they are, with platinum in third place at $69 increase. But look at silver. Silver's been performing very well over the last few days, outperforming gold. It's up $1.10 now at $14.47. That's getting back into the realm of the recent lows we've seen before all this happened, of below $16 into the high 15s. Silver still has a way to climb back up, though, at least in the paper markets. But we are seeing the physical market still being separated. Still a lot of premiums on silver out there as people look to purchase. And I think that you might see them squeeze together slightly, but I think you might still see the physical markets with these higher premiums continue as the demand grows for silver as being the prime opportunity, even more so than gold, because gold is rushing up very quickly. And make no mistake, people are trying to get in on gold too, but they're getting near the prices now that are becoming more unobtainable for those who are accumulating the metal as a safe haven. But it doesn't mean it won't stop on its ride upwards, because we are in uncertain economic times. However, the stock market did rally today, up over 2,000 points to its biggest increase. And I don't know how long. I heard it on the news on the way home, but I think it's the biggest increase since the depression started, and coming back up, especially for a one-day period. So what does this mean for gold and silver if a stimulus package can be passed? And it's looking like that the markets are moving based off of the hope that Congress will finally come to an agreement on this stimulus package that will help businesses stay liquid, which really should be the only goal of a stimulus package, is to keep small and medium size and some bigger business up and running, to keep its employees paid, keep their bills paid that they owe, so that they can continue to operate as such, and so that when this is over, they can just continue as they have been. I think that is the key to economic recovery now, is to keep the logistics of businesses and the service industry and other industries afloat while we go through this isolation period, self-quarantining and social distancing and the like. It's everywhere now. How long will it last? Well, we're just over halfway through the 15 days of a distancing period. We'll see what happens afterwards. The president has alluded to possibly reopening things, and certainly not having a national shutdown of any stretch. I agree with that. I think that it should be left up to the states and be more stringent in high-risk states like New York, where the virus is become essentially ground zero. But be very careful. No matter what happens, even if all the restrictions are lifted tomorrow, I believe we should all do our due diligence, practice social distancing, and be safe, because we don't want people getting this virus, no matter what age you are, but especially if you're at a high-risk age. It's the best thing to do is to slow and stop the spread of this thing. But moving ahead, there are opportunities here, and people are seeing opportunities in gold, but there are also opportunities with silver, potentially, and still, some deals could be had. I think with the price rising up now, you might be more apt to find closer to spot deals than you have in the past. Now, the next article here is very interesting to see that this gold buying app sees a 718% spike in volume as the coronavirus volatility drives investors to safe haven. Another article from MarketWatch. Gold buying apps, which allow customers to buy and use the precious metal for everyday spending, are seeing record volumes as investors flock to the safe haven commodity amid violent market swings on fears of the coronavirus-fueled global recession. British-based startup Glint Pay Services, which operates in the U.S., the UK, and continental Europe, said it has seen a 718% increase in clients purchasing gold over the last 5 weeks as volatility stemming from the coronavirus pandemic swept through markets. Sales are going through the roof, Jason Cousins, founder and CEO of Glint, told MarketWatch in a telephone interview. We are breaking records every day. The average gold purchase per customer has increased in the past 5 weeks to 2,739 pounds from 1,373 pounds, Cousins said. Founded in 2018, Glint allows customers to buy and sell and spend their physical gold instantly through a debit card linked to MasterCard network via multi-currency app. You see more companies do this type of thing, by the way, which I think is quite good, as long as they're viable and legitimate. Customers can buy as little as 1 cent of gold to more than $1 million worth and use it to buy anything from coffee to a car. Cousins said gold is the ultimate form of money. Today, Glint has more than 74,000 app downloads, tens of thousands of registered users, and more than 69 million pounds in transacted volume. It has plans to launch the app in Asia, which I think would be very lucrative for them, possibly. The company will roll out person-to-person payments to clients within the next couple of months so that everyone can send gold in lieu of currency payment. It's as easy as sending a text. Gold trading volume at GoldX are also soaring, up 125% in 2020 compared to last year. In a month-to-month comparison of 2019, the amount of gold buys and sells has increased by a staggering 16,000%, with a week left to go in the month. And, this goes on to talk about the company, that's fine, but we can basically say that there's a lot more digital buying. In fact, APMEX and other bullion companies, Dillon Gage, has digital gold buying options where one gold is one instance where you can buy increments of gold with a small fee to be able to hold the gold there as a custodian representation, digital gold, and cash it out essentially for product at any of these bullion dealers' pages. And I think that's one way to save up. Probably something I would have considered doing, but I'm one of those, I like to just buy it and get it in hand. If I'm going to do it, just buy it and get the product in hand, because I'm still a little bit nervous about using digital services, at least right now. To me, they got a little bit more proving ground to do, including something like this as well. But nonetheless, we'll see how it plays out. It is the wave of the future, the digital transactions, but I think gold can be a part of it. And I believe that it is important thing to consider. I think that's one thing that's going to help keep gold alive, is to have at least some apps or applications that are based off of it, as long as they are actually, that you can actually get the gold if you need to cash out in gold, for sure. But nonetheless, that's where things are today. The metals are reacting strongly. Gold's making that comeback, as I mentioned in yesterday's video. We'll see how it plays out. Post your thoughts below. I'd like to extend a multitude of gratitude to you all for watching, and encourage you to please rate, share, comment, and subscribe.